Let's play out to you one CNBC exclusive. Emerging market guru Mark Mobius of Mobius Capital Partners says that the tussle between the government and the RBI spooked foreign investors. But more importantly, he's worried about Prime Minister Modi's possible impending decision on farm loan waivers. Says foreign investors are keenly watching populism in India.
As you know, Congress Party has come out and said, look, we're going to give away to the farmers their loans. In other words, we're going to cancel all their loans. This is a lot of money for the states and for the central government.
Sure.
And, of course, that throws the whole budget out of balance. And now we're holding our breath to find out what Modi is going to do. Because, you know, if you want to get elected, you got to give something to the farmers.
Right.
So if this battle, this trade-off continues, it's not going to be very good for the budget. It did spook foreign investors because they're always concerned about central bank independence. It doesn't spook me. I don't think this is a big deal. In fact, it's pretty well known that the Federal Reserve, the central bank in India, has a lot of cash, maybe too much than what they need. And some of that could be given back to the government. I think that's what Modi is trying to do. There are some very good opportunities, particularly in the non-banking financial sector, because that's really been bombed out. And some of these companies will survive and grow, so we want to look at those carefully. I'm kind of happy with Powell. I think he's very cautious, and I think he listens to Trump. And when Trump gives him a warning, he then looks at the numbers again. And I seriously believe that the reason for raising rates is going to be very tenuous going forward, because I think you're going to see inflation not moving up to the degree that people think. And productivity is, of course, pushing down costs to a great degree. They will reach an agreement by the end of this year. I know it sounds like a long time, but I think the negotiations are going to be very tough. There's no reason for Trump to go easy and not try to achieve what he is wanting to achieve, and that is a substantial reduction in the trade deficit with China. So I think you're going to see good news coming out, but it's going to take time. And these negotiations will be dragged out a little longer than we expect. I think a lot of it already is in the market. If you look at the 30–40% declines in various markets, you realize that, you know, there's a lot of pessimism out there. So what we're doing is looking at more of the specific industries that may be protected from this general tech slowdown, and also some tech names that are so bombed out that there's an opportunity to look at them. Anything involved in components, for example, some of the component suppliers that are in a very strong position, in other words, they have a leading position where people like HP or Apple have nowhere else to go, those are the ones that we would want to focus on. I think unless these other structural problems are solved, I think there'll still be an outstanding issue that will drag on and be pretty negative. And I think the Chinese realize that. I think they realize that they have to make some more moves. And the main one is to allow American companies to go in and be 100% owned. That's the number one. And that also partially solves the technology transfer issue, because then the American companies will say, look, I don't have a partner. I can be very, very careful in what people do with my technology.
Right. You will get to hear more of Mark Mobius and what he told CNBC. That was yesterday.